Hello and welcome to another episode of Finantax Clips, your one-stop channel for all things finance. We're here to demystify the complexities of the financial world, one clip at a time. Today, we'll be unearthing a couple of intriguing topics. First, we'll pull back the curtain on the startling median home prices across the United States. Unveiling these figures might just leave you gobsmacked. But don't worry, we're not here to just shock you and leave. We'll also explore an interesting cost analysis, junk silver versus cash. We'll delve into the depths of both, helping you understand their implications in today's financial landscape. Whether you're a savvy investor, a curious homeowner, or simply someone who enjoys a good financial deep dive, this episode is for you. So, without further ado, let's dive right into the heart of the matter. First off, we're going to shed some light on the current state of U.S. median home prices. Let's dive right into the thick of it. The housing market has been a topic of intense discussion and analysis, particularly over the last year, and for good reason. The numbers are, quite frankly, staggering. The median home price in the United States has been on a steady climb. As of the end of 2023, it clocked in at over $300,000. Yes, you heard that right. The average American home now costs more than $250,000. But wait, it gets even more intriguing. The rate at which these prices are increasing is also worth noting. Over just the past year, the median home price shot up by an astonishing 7%. This is a higher annual increase than we've seen in the past decade. Now you might be asking, why are we seeing such a dramatic surge? There are a few key factors to consider. The first is simply supply and demand. There's a limited supply of homes available and a high demand for them, especially in booming cities and desirable neighborhoods. The second factor is the cost of construction materials. Everything from lumber to concrete has seen a marked increase in price, driving up the cost of new builds and renovations. Lastly, we can't ignore the impact of the pandemic. The shift to remote work has driven a wave of people out of cramped city apartments and into suburban and rural homes, further driving up demand. These numbers are certainly eye-opening, and they set the stage for our main topic of discussion today. It's clear that the housing market is in a state of flux, with prices reaching new heights. This has significant implications for both current homeowners and potential buyers, and sparks important conversations about affordability and the future of the American dream. So, what does all this mean for you? Stay tuned as we delve deeper into the implications of these shocking figures and trends. Now, let's shift our focus to junk silver, a term that might be unfamiliar to some. Junk silver, despite its seemingly off-putting name, is no junk at all. It's a term coined for circulated silver coins, primarily from the United States, that have no numismatic or collectible value above the content of their silver. These coins were minted before 1965 and include dimes, quarters, half dollars, and dollars. They're made of 90% silver and 10% copper, and they hold a significant place in the world of precious metals. You might be wondering, why the term junk? Well, it's a bit of a misnomer. The term junk was simply used to differentiate these coins from their more valuable numismatic counterparts. The value of junk silver lies not in its face value as currency, but in its intrinsic value as silver. In the financial market, junk silver plays a crucial role. It's considered a tangible asset, something you can hold in your hand, and it's not subject to the same risks as paper money or digital assets. It's a hedge against inflation, offering protection when the economy turns sour. This is because the price of silver, like other precious metals, tends to rise when the economy is in distress. Another advantage of junk silver is its divisibility. Unlike gold bars or even silver bullion, junk silver coins can be used for small, everyday transactions. This makes them a popular choice for those who want to be prepared for any economic situation, including the potential collapse of paper currency. So, why should you care about junk silver? Well, it's a tangible, stable asset that holds its value. It's a form of insurance against economic instability, and it's an accessible way to invest in precious metals. So, that's junk silver in a nutshell. Now, how does it stack up against cash when it comes to cost? We're all familiar with cash, but let's take a moment to consider its value in our current economic climate. Cash, those paper notes and metal coins we use every day, is a tangible asset. It's a physical representation of value that you can hold in your hand, and there's a certain comfort in that. But cash isn't without its drawbacks. Inflation can erode its value over time, and it's not as easily invested or grown as digital assets. It's also vulnerable to theft or loss, unlike digital money, which can be backed up and secured. Yet, in uncertain economic times, the tangibility of cash can be its strength. It doesn't rely on electronic systems or banks. It's right there in your pocket. This makes it a reliable form of currency, even when other systems might falter. With that understanding of cash, we're now ready for our cost comparison. Now we're getting to the crux of the matter, a cost analysis of junk silver versus cash. Let's start with junk silver. In essence, junk silver refers to silver coins that have been circulated and are no longer in mint condition. Despite the name, these coins are far from junk. They are often highly sought after due to their silver content and the fact that they are no longer produced, which adds an element of scarcity. The cost of junk silver is usually determined by the weight of the silver in the coin and the current market price for silver. On the other hand, cash is a medium of exchange, usually in the form of banknotes and coins, issued by a government. The value of cash is determined by its face value, that is, the number printed on the banknote or coin. However, it's important to note that the purchasing power of cash can be eroded over time due to inflation. Now, let's compare the two using some real-world examples. Consider a pre-1965 Washington quarter, which is 90% silver. At a silver price of $20 per ounce, the silver content in this coin is worth approximately $3.60. Compare that to the face value of the quarter, which is 25 cents. That's a significant difference. On the flip side, consider a modern quarter, which is made of a copper-nickel alloy. Its intrinsic value, based on the metal content, is less than 2 cents. However, its face value is still 25 cents. That's because the value of cash is not tied to the value of the materials used to produce it. Now, let's look at a case study. Let's say you have the option to receive your salary in either junk silver or cash. If you choose junk silver, you'll be paid in pre-1965 quarters. If you choose cash, you'll be paid in modern quarters. Assuming you're paid $1,000 per month, you'd receive 4,000 pre-1965 quarters if you opt for junk silver. At $20 per ounce for silver, your salary would be worth approximately $14,400. On the other hand, if you opt for cash, you'd receive 4,000 modern quarters, which have a face value of $1,000. However, this doesn't mean that junk silver is always the better choice. There are a few factors to consider. First, the market price of silver can fluctuate, which means the value of your junk silver can go up or down. Second, junk silver is not as liquid as cash. You can't easily use it to pay for everyday items like groceries or rent. Finally, storing and transporting large amounts of junk silver can be inconvenient and potentially costly. In contrast, cash is stable, liquid, and convenient. You can use it to pay for goods and services anywhere and at any time. And while inflation can erode the purchasing power of cash over time, this is often offset by increases in wages and salaries. So, the choice between junk silver and cash largely depends on your individual circumstances and risk tolerance. If you're comfortable with the volatility of the silver market and have a means of safely storing and transporting your junk silver, then it could be a valuable addition to your financial portfolio. If, on the other hand, you value stability, liquidity, and convenience, then cash is likely the better option for you. As we can see, the cost comparison between junk silver and cash is not as straightforward as it might initially seem. Now, let's bring this back to our earlier discussion on median home prices in the U.S. In light of the cost analysis between junk silver and cash, there are some crucial implications for those in the market for a new home. This comparison provides a unique perspective on the value of money and how it can influence your purchasing decisions. Imagine for a moment that you're a home buyer considering the median home prices across the nation. Alongside the traditional cash option, we now introduce the concept of junk silver. You might be wondering, what does this have to do with buying a home? Well, it's all about understanding the value of your money. When we talk about junk silver, we're referring to coins that have a high silver content but are not considered rare or valuable to collectors. The value here lies in the metal itself, not the coin. In times of economic uncertainty or inflation, these coins can retain or even increase their value, unlike cash, which can be subject to depreciation. Now, when you're saving for a home, every penny counts, right? So, if you're holding on to cash, it's important to consider its potential depreciation over time. On the other hand, if you're holding on to junk silver, you could potentially see an increase in your savings, thanks to the intrinsic value of the metal. So what does this mean for home buyers? Essentially, it's about understanding how your savings can be influenced by factors beyond your control, like inflation. This understanding can help you make more informed decisions about when and how to buy, potentially saving you money in the long run. Of course, this is just one aspect of a complex financial landscape. There are many factors to consider when buying a home, from interest rates to market trends. But by understanding the potential implications of your chosen saving method, you can navigate this landscape with greater confidence and foresight. As always, understanding the financial landscape can go a long way in making informed decisions. And that's a wrap on our analysis of junk silver versus cash in the context of U.S. median home prices. We've journeyed through the statistical landscape of current U.S. median home prices, unveiling some truly shocking figures. The daunting numbers have painted a vivid picture of the financial hurdles that many potential homeowners are facing in today's market. We then delved into the intriguing world of junk silver, exploring its value, its characteristics, and its potential as an alternative form of investment. This often overlooked asset can serve as a hedge against inflation, a safeguard against economic instability, and a tangible asset that you can hold in your hand. Next, we turned our attention to cash, the most common form of payment and investment. We discussed its strengths and weaknesses, the comfort of its familiarity, and the potential pitfalls of its decreasing purchasing power. The crux of our discussion revolved around a cost analysis of junk silver versus cash. We compared and contrasted these two forms of wealth, examining their respective pros and cons, and their implications in the context of purchasing a home. This analysis aimed not to advocate one over the other, but rather to equip you with knowledge and insight to make informed decisions that suit your unique circumstances. Finally, we looked at the implications of our findings for home buyers. We presented some food for thought, some practical advice, and hopefully, some inspiration to explore unconventional avenues of investment and wealth accumulation. In essence, our journey today underscored the importance of financial literacy and adaptability in an ever-changing economic landscape. It's about making your money work for you in the best way possible. Thank you for joining us on Finantax Clips. If you found this video helpful, don't forget to like, share, and subscribe for more insightful content. Until next time, stay savvy and make your money work for you.